Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Monday morning pre-market webcast. Okay, daily chart of the ES. Let's zoom in a little bit here and see what we got. Um, we did 1471 quarter overnight, so basically a tick lower than the Friday high. We've traded as low as 1464 quarter, currently trading 1466 quarter. Here's my thoughts about where we are. I'm going to remain concerned that we're going to see further upside until you start to see this Bollinger Band start to curl lower. Right now, it's pointed up at a 45-degree angle, and as long as it's pointed up at a 45-degree angle, and you've got this air up here between price and the upper band, you run the risk of running up to the 1485 area, which I really didn't think was going to happen. But the more we trade, unless you really see a significant rollover today and a rollover that breaks through the Friday low of 1462 quarter and stays below it, okay? Going down and bouncing off 63 isn't going to do anything except probably breed new highs. The bulls, the bears rather, if they're serious, they have got to break the lows of the previous day and then hold those lows on a closing basis. They tried to do it here, but they couldn't maintain it for more than a couple of days. And that's just basically indicative of some profit taking and then moves higher. You've got a lot of people that are long this market, and you have a lot of shorts that are betting that the market is going to turn on a dime. And those weak shorts getting squeezed add fuel to the fire, and that's why we keep getting these higher prices. It's not because, we're overbought. We're overbought, and we are about 45 handles above the 45-day pivot, which is not crazy. It's simply overbought, but it's sustainable right now. So I'll be looking for the bears to break the lows and then make the run back toward the 1450 area. If the 63-64 area holds, then I would look for the bulls to move back up to 71, make a run at 74, and then 78. Okay, there's no real news today to speak of, so there's really nothing standing in the way of a move higher, unless there's a piece of news that comes out that really knocks us down. And I think it's really going to take a piece of news to roll the market over at this point. You've got to do something to scare the longs out of their positions, because the longs now are very comfortable being first of all, they're very comfortable being long. Second of all, they're very comfortable in buying a dip, kind of like this dip, because they just feel that as a percentage move, it's going to go higher. And you got to look at it this way: if this flash move lower didn't break, and if the move down to the 200 didn't break, that got confirmed the next day, then you can see why the bulls are emboldened, and you've got to respect that as a bear. I continue to be swing short. It is a very small position relative to what I plan on having on the trade ultimately. So I'm content to bide my time on a swing basis, waiting for those Bollinger Bands to curl lower and have the market pull back to the middle band. Okay, everybody have a fantastic day. Mike Vacchi, Princeton Trader from Mr. Topstep. Trade them well, everybody. I'll be back tomorrow morning with another webcast.